Hi, my name's Phil Trickey. I'm with Yamaha Motor Manufacturing Corporation. I'm their Chief Financial Officer. I'm a CPA and have significant experience in accounting, which is very interesting because today I'm going to tell you to throw out all of the accounting rules as you learn how not-for-profits focus their energies in terms of financial results. I've been a member of the board of the Neenah-Coweta Chamber of Commerce coming up on 3 years. I've been tasked with helping you learn how Chamber of Commerce and not-for-profits look at their financial situation. We're accountants. The beauty of accountants is we neither hunt nor gather. We don't actually do anything. We just tell those that do how they can do it better, and more importantly, where they did it wrong. Try to inject a little humor because this is a fairly dry topic. Most businesses use generally accepted accounting principles, also known as GAAP, to look at their performance. That's typically measured in a term called profit. It's required for SEC reporting and attempts to level the playing field for companies that are competing for investment dollars. It is a very important yardstick when you are looking at confidence from the public. It's also used by the IRS to look at your tax liabilities so that companies are evaluated against the same standard. As a chamber and a not-for-profit, there is only one thing we care about, and that is cash. Cash is king. Why doesn't profit equal cash? Well, in the long run, profit is what you would expect to make if all of your customers paid on time and all of your expenses were spread out over that exact window of time. Over a very long period, your profit and your cash will match, but that doesn't work on the short term. No company, no organization has any ability to spend profit. You can't pay your bills with profit. You can only spend cash. Profit's a historical measure. For an organization like a chamber, it's completely meaningless. The key in a not-for-profit is making sure that your outgo is not more than your ingo, because otherwise your upkeep or your overhead will become your downfall. We have very basic financial statements that are used in a not-for-profit. A profit and loss statement, normally managed on a cash basis, that tracks your revenues, tracks your expenses, and lets you know what you have left over or what you've had to take out of your reserves in order to make it through the year. You have a balance sheet that talks about what you have coming to you, what you may owe, and basically gives you a snapshot of your financial position. And then we also have summary report cards or scorecards that help us look at key indicators that may tell us how we're doing as a chamber. Cash versus accrual, what's the difference? Cash basis is very simply what it says. Money is counted when you get it, and you record your expenses and pay them as they come up. Accrual basis tries to track when services are rendered, where you invoice a customer, and when expenses are incurred. A key difference here may be membership. If you invoice members for the renewal and they don't renew, in the accrual basis you would count that. In a cash basis, you only count it when they give you the check. Basic fundamentals. An annual budget should be set and approved by the board. Your basic operating expenses should be controlled within that budget that's been approved. And you should establish flexible items that can be spent or belt and tightened depending on how the year is unfolding. The staff and finance committee should monitor the process of the actual revenues against what was set in the budget and against the expenses against the budget at key checkpoints, usually quarterly at a minimum, but often monthly. And try to establish reserves for future capital projects or to protect for rainy days or years. It is really important to understand your cash position. What do you have? What do you owe? Where do you project to be as big events are coming and going? Do you have the money to fund upcoming golf outings or major projects? Where's our income coming from? From new members, from renewals, expected major contributors? How are our events going to bring in money and how are we going to spend money for the events? How are we generating non-dues revenue? Key indicators also are accounts receivable. Who has not paid the renewal? That could be an indication that we may not be meeting the needs of our members. If they're not writing our checks on time, is it because they don't feel they're getting what they need to get? How do you stay in touch with them and monitor that? accounts payable, can we pay our bills on time? Or the nice person that provided a service from them, are we begging them to wait until more money comes in? If you can't pay the bills on time, it's a symbol that you've got some challenges. And are the expenses being controlled within the budget? Do you understand where the money is going and how it's being spent? At the end of the day, the key measure for any not-for-profit is the cash that's coming in to support the membership, managing the expenses that are out there to try to support the programs for the members. At the end of the day, cash is king.